Good evening, everyone. We'll wait for 2 more minutes and for others to join, and then we'll start. Hello, everyone. Good evening, and thank you for joining and logging in to this webinar where we'll be talking about a new NFO which we are coming out with. And this is an index fund. So, this is going to be our first domestic equity index fund which we are coming out with. Till now, we have been coming out with ETFs, fund of fund. But index fund is also one route via with which people can take exposure in the underlying benchmark, and as a product manufacturer we want to provide solutions to people, and with that objective I think what we are coming out with can form part of your core portfolio, and it's a very powerful offering. So we'll be discussing about Mirae Asset Nifty Total Market Index Fund, and the NFO starts today on 8th of October, and the NFO will close on 22nd of October. So please obviously stay back and listen to the entire webinar as I just uh, chart across why Nifty Total Market Index is actually the most true to label passive investment which there can be, right? There are tens of thousands of indices. There are more than 400 passive ETF and index funds right now. But if you ask me that, Siddharth, pick one index which is, let's say, most true to the label passive product, I'll probably pick as an index Nifty Total Market Index, and to be fair, BSE All Cap Index. The reason is that, as the name suggests, it represents the entire market, right? And passive investment is about basically taking a market exposure. So this is the broadest and most true to the label passive investment. So so what so when we were thinking about, let's say, which is the right product uh, when it comes to uh, a core portfolio, obviously Nifty 50 provides exposure to large cap. Mid cap 150 provides a very good exposure to 150 mid cap companies, has done really well in last 1 2 years. Small cap 250 provides exposure to small cap 250. Micro cap 250 is there. There's an index fund on that by one of the AMCs. But we feel that all of these products, yes, Nifty 50 can form part of your core portfolio, possibly mid cap also, but other two, possibly in a tactical manner, people invest or they take exposure. separately in their satellite portfolio, etc. I think when it comes to investing, you should look at the entire universe, right? And that universe, investment universe, can form part of your portfolio, and then you can build onto that, right? And this total market investment philosophy, which I'll come to that, talks about investing in the entire market, does not differentiate between or picks only large cap, mid cap, small cap, or micro cap. It talks about investing in all of them, right? Because it aims to provide you market exposure. It aims to provide you exposure to all the companies, all the sectors, all the industries. And then based on your risk profile, etc., you can add products on that. A person who has a very high risk appetite on total market product can add exposure to a small cap fund or a mid cap fund or international fund. A person who has, let's say, a lower risk profile can add on to a Nifty 50, let's say, and increase the large cap exposure. So, and why this is important is that, first of all, let's talk about India. India is obviously becoming increasingly attractive. Yes, recent 5-10 days have been volatile, but I think that's okay, right? People are talking about 5% correction in Nifty 50 as if something really bad has happened. But I think any reasonable correction is healthy for the market, right? Fundamentals still looks really strong, both at the central government level in terms of GSTs in terms of tax collection, fiscal, etc., and even at a corporate level, things look pretty stable and robust. So I think there's no sorts of cause of concern when we are looking domestically. Yes, there are concerns at geopolitical level. There are concerns that if China becomes more attractive, we can see some amount of FII outflows and obviously valuations, right? But what it does, it does not, it simply expands your sorts of investment horizon. And ideally now, if you are looking at, you should look at an investment horizon of at least 5 years to get good returns from the market. So India as a whole, we have seen that now GDP per capita is 2,400 US dollars, which is still pretty low, and we have a long way to go. I think anything which crosses over 4,000 is somewhere we start seeing a good inflection point. GDP growth rate at 7.6, export is now 21.9% of GDP. And now we very recently we had heard the news that our forex reserves have crossed $700 billion. Now all that is okay, right? We all believe in India's story. We believe that India is going to do well. The question is at what pace, right? Are we going to become top three by 2028 or 2030? That's the debate, right? But we believe that India, because of demography, because of the way it is placed geopolitically, etc., because of so much room in terms of appetite in consumption, appetite to grow in infrastructure, room to grow in manufacturing. There's so much potential that we all, obviously, with right policies, and the way we are seeing growth happen in the last 3-5 years, both at GDP level and at a corporate level, it's very encouraging, right? So when it comes to investments, we then think about कि इक्विटी में हमें कहाँ इन्वेस्ट करना है, राइट? लार्ज कैप में जाए, मिड कैप में जाए, स्मॉल कैप में जाए, या फिर माइक्रो कैप में जाए, राइट? एंड दिस डिबेट्स बिकम वेरी इंपॉर्टेंट राइट नाउ व्हेन पीपल आर आल्सो टॉकिंग अबाउट वैल्यूएशन. And this is, we feel that Indian equity market right now has opportunities across segments, right? You have large cap, which covers bank, IT, pharmaceuticals, metal and mining, passenger utility vehicles significantly. Then mid cap, which covers में आप कमर्शियल व्हीकल्स, फिनटेक, कैपिटल मार्केट के आपको काफ़ी कवरेज मिलता है. देन स्मॉल कैप में आपको होटल्स एंड रिजॉर्ट्स, यू गेट रीजनेबल इंफ्रा प्ले ऑल्सो इन दी स्मॉल कैप सेगमेंट. एंड देन ऑल्सो माइक्रो कैप इज ऑल अबाउट capturing those emerging companies, and then there's also sectoral representation like shipping, digital entertainment, biotechnology, and this will grow, right? You will, as more and more companies gets listed, right? Swiggy list होगा उसके बाद, और जो आपकी नई सारी Hyundai list होने वाला है, और NSE will get listed. With more and more listing, the opportunities across large, mid, small and micro cap will increase, because as per SEBI there are 100 large cap only, right? If NSE gets listed, let's say Hyundai gets listed, Swiggy gets listed at a, let's say, a good valuation, you have a potentially three more large cap companies. So three large cap companies will become a mid cap company automatically, just because of new opportunities. Similarly, as and when more IPOs will get sorts of listed, you will see that lot of existing companies will move down, right? And your participation of industries across market cap segments will change. So अगर आपको इंडियन मार्केट का एक प्रॉपर रिप्रेजेंटेशन लेना है, राइट? इफ यू हैव टू इन्वेस्ट इन इंडियन इक्विटी मार्केट राइट नाउ, यू हैव टू बिकम market cap agnostic. And again, I'm talking from a long term investment point of view. You should look at large cap segment for stability, but you should also look at mid, small and micro cap for growth opportunities. Yes, valuations are high right now, especially on the micro cap side and some bit on the small cap side. But then if you're looking from a 5-year, 7-year point of view, with more and more IPOs coming, with obviously more and more industries getting higher representation, like let's say like fintech, etc., you will see कि ये सारे segments will become important in any investor portfolio, right? And also if you look from a size point of view, also things are changing. 2014 में अगर मैं पूरे यूनिवर्स को देख रहा था, तो 81% by size, by market cap was large cap, 81.4. Only 12.2% was mid cap, only 5% was small cap, and just 1.3% was micro cap from an MCAP representation point of view. But now if you look at 2024, you can see that has completely changed, or significantly changed. You have the large cap representation, in fact a reasonable rally के बाद भी large cap representation from 81% has gone down to 71%. 10% का downfall है. The mid cap representation has increased from 12% to 16%, 16.7% in fact. Your small cap has increased from 5% to 9%. And your micro cap has increased from 1.3% to 2.8%. And all this is in terms of full market cap. So anyone who would have invested in a total market product, a total market fund, which invests across market cap segment, उसके साथ क्या हुआ होता कि 2014 2019 में when large caps were more relevant, स्मॉल कैप बहुत ही छोटे थे, एंड माइक्रो कैप्स वर लाइक रियली स्मॉल, उसका एलोकेशन प्रोपोर्शनली ही होता. लार्ज कैप में 82% इन्वेस्टेड होता, 12% मिड कैप, 4.8% small cap and 1.2% micro cap. But as small cap and micro cap increased in size, increased in relevance, your allocation would have shifted automatically. You don't have to take that call separately. आपका लार्ज कैप 71% हो जाता, your mid cap would have increased to 16.8%, your small cap would have become 9%, and your micro cap would have become 3%, allowing you to take sorts of returns from all the four segments. And I think in a very prudent manner. 70% large cap, 17% mid cap, 10% small cap, around 3% micro cap is a very good sorts of, I think, balanced portfolio. A person who would have invested individually had to do all these things separately. He would have had to add money to mid cap, to small cap, to micro cap, reduce money from large cap. In this single total market offering, all of that thing would have happened on its own. And that's the power of total market, right? And again, one more illustration ki kaise market evolves. What is large cap right now probably won't be large cap yesterday, right? For example, in 2019, the cutoff of large cap, which means the smallest large cap stock ka M cap was 28,000 crores. Again, the smallest large cap ka M cap was 28,000 crores. Right now, it is almost more than three times at 89,000 crores. So, in other words, पहले 30,000 करोड़ की कंपनी भी लार्ज कैप कहला जाती थी. आजकल 17,000 करोड़ की कंपनी भी लार्ज कैप नहीं कहलाती है. राइट, इट इज एक्चुअली अ मिड कैप कंपनी. इवन an 80,000 करोड़ की कंपनी, 85,000 करोड़ की कंपनी इज अ मिड कैप कंपनी राइट नाउ. That's how much in terms of size and scale the Indian market has grown, right? There are 242 companies right now, August ending data पे, जिनका market cap is more than the large cap का market cap cut off 5 साल पहले का. So 5 साल पहले 28,000 was the large cap cutoff, which I just mentioned. इस समय there are 242 companies which are more than 28,500. Similarly, mid cap ka cutoff was 8,200 in 2019. Right now it is 27,000. So there are 519 companies right now जिनका M cap 5 साल पहले के mid cap cutoff से ऊपर है. So you see how sorts of your Indian markets are evolving. Your mid caps are becoming actually larger in terms of size representation. So is small cap and so is micro cap. And hence, if you want to participate in this journey of stocks from all these segments, sizes, industries, then you have to think about investing in a total market fund. And total market investment strategy is not something which is sort of we are introducing. It is popular globally. US alone $60 billion of asset on total market schemes. 660 billion, which is almost 8% of total assets, which is significant. And when it comes to the Nifty total market index, ये representation करता कैसे है? It invests in all 100 large cap stocks. It invests in all 150 mid cap stocks. It invests in all 250 small cap stocks, and it invests in 250 micro cap stocks. So it will include all Nifty 100 stocks, Nifty mid cap 150 stocks, Nifty small cap 250 stocks, and Nifty micro cap 250 stocks. So this is a 750 stock portfolio जहाँ पे आपको सारे large cap, सारे mid cap, सारे small cap and 250 micro cap का representation मिल रहा है, and hence you are getting a total market product. So right now, as I mentioned a while back, and again reiterating, अगर मैं इस समय देखूं, if you invest in this product, if you invest in this product, you will get 72% large cap exposure, you will get 17% mid cap exposure, you will get 9% small cap exposure, and 3% micro cap exposure. So in a way, you are getting everything. And the best thing is that whichever way market will evolve, this representation will also evolve. For example, let's take two scenarios. in next 1 year, markets behave very volatile. Your mid cap and small cap correct. Your large cap stays wherever they are, or sorts of give a positive return, slightly positive return. What will happen is that your large cap representation will increase from 72% to 75-76%, because market cap of large cap would have remained stable or would have grown, whereas बाकी सबका market cap नीचे आ जाएगा because of the correction. अगर उल्टा हो, let's say small cap, mid cap and micro cap continues to do well, the representation of mid cap, small cap and micro cap will increase. They will, let's say, possibly a mid cap can become a 20% representation, a micro cap become a 5% representation, which will again reflect how India is evolving. So all this representation will happen within the fund itself and will totally depend on how market will evolve. If micro cap becomes larger, the allocation towards micro cap will become larger. If small cap becomes larger, the allocation towards small cap will become larger. If mid cap becomes smaller, the allocation towards mid cap will become smaller. And through this product, we represent almost 96% of all market cap which is listed on Indian equity markets. All 96% from a market cap point of view. So एक fund के through आपको 96% of coverage मिल रहा है of the entire market. And also what it helps is in a way multi sorts of balanced performance. You will see that there will be years when you will see the total market is somewhere in between consistently. In 2013, the second best performer. You'll see that it will sorts of never be bottom performer and never be top performer, because it is investing in all the four market cap segments, and hence the entire fact कि you do क्या नाम है market cap segment picking by yourself, I think it is better to let total market do it, right? Because it is difficult to identify segments which are doing well or which are not doing well, right? अगर मैं उल्टा देखता हूँ कौन सा segment अच्छा नहीं कर रहा है, 2023 large cap was only 21% return, worst performer. 2022 में small cap was the worst performer. 2019 में micro cap was the worst performer. Same in 2018, right? Surprisingly, I cannot see the mid cap name, but if you look at 2022, mid cap was the second worst performer. So this is very important, right? So basically, instead of picking which segments will do well at what time, आप total market में invest करिए. And then on the base of total market cap, which can form part of your core portfolio, you can take those tactical calls on small cap, on micro cap, on mid cap, etc. Now, from a sectoral coverage point of view also, as expected, because you are investing in the entire market, you have representation of almost everything. Nifty 50 सिर्फ 22 में से 13 सेक्टर कवर करता है, but Nifty total market covers all 22 out of 22 sectors. Same from a basic industry point of view. There are 197 basic industries. Nifty 50 covers only 27, whereas total market covers 147. Now, from a method point of view, it's very simple, and मैंने already explained किया हुआ है that it is combination of Nifty 500 plus micro cap 250. Which is Nifty 500 is what? Nifty 500 is combination of Nifty 100, which is all 100 large cap stocks, Nifty mid cap 150, which is all mid cap 150 stocks, Nifty small cap 250, which is all small cap 250 stocks. So you have representation to all mid cap, all small cap, all large cap, and then 250 micro cap stocks. The rebalancing is done on a semi-annual basis. So every September and March, the index is reviewed and the changes are made. Now, from a performance point of view, I think because it is expected, right? अगर आप longest term में, if you believe that in 5 years, 7 year horizon, mid cap, small cap, or your micro caps will do well, right? Long लंबे अंतराल में, you will see total market doing well versus a Nifty 50 or a Nifty 100 index, and that is what has happened. And I feel that as more companies will get listed, even the micro cap segment, which from a NSE point of view is 501 ranked stock till 750th ranked stock, that 250 micro cap will also become very very special. See, within micro cap, we are not talking about anything beyond 750. तो 750 के नीचे तो और छोटे स्टॉक्स आते हैं, बट ये जो टॉप 750 का यूनिवर्स है will increasingly become more and more relevant, and which is I feel that Nifty total market index is superior to even Nifty 500 from a longer uh, uh, from a longer investment point of view, etc., because it gives you gives importance to your micro cap companies also, right? Which is 500 first ranked till 750th ranked company, and this is reflected in the performance also. आप देखिए, in last 5 years it has given 23.2% return versus 19.4% on Nifty 50, as expected, because mid cap small cap ने अच्छा किया है. बट अगर आप Nifty 500 से भी कंपेयर करेंगे, it has almost beaten that by 50 basis point or so, and the same trend continues across investment horizon. And I think you'll find this thing happening especially for a longer horizon, because I said that while there can be a short-term volatility in mid-cap, small-cap, etc., if you're looking at a 5-year, 7-year, typically you'll find these segments doing better than the large-cap segments. The same thing happen when we are looking at a calendar year level performance. In times when your mid caps, small caps, micro caps are doing well, you will see this index doing well. And I think, again, as I mentioned it, I think it is a better proposition than investing in Nifty 500. The way Indian equity market has expanded, you will see more representation in total market, and hence you will possibly see, I think, a more balanced performance, a performance which captures the entire breadth of Indian stock market in a total market strategy. From a risk to return point of view also, because it is 750 stocks, even after adding micro cap, you will see risk to return is very promising. And जो micro cap add भी हो रहे हैं, from a weightage point of view, it is only around 3% or so, right? So I think it is again very rightly balanced in terms of trying to capture that opportunity, and then obviously not having so much weight so that it tilts or it gets a bit risky. But if you look at risk to return ratio, it is better than Nifty 500, in fact better than Nifty 50 for 5, 7, 10, 15 year horizon. Now again, rolling return is something very popular. So I'll talk about 3-year rolling return, and people can obviously refer to 5-year rolling return also by themselves. So in 3-year rolling return just talks about कि अगर आपका investment horizon 3 साल का होता तो आपकी क्या रिटर्न बनते, एंड जो पीरियड है उसका मतलब कि हमने ये चीज को एवरेज करके देख रहे हैं कि पिछले 3 साल में किसी का भी 3 साल का इन्वेस्टमेंट होराइजन होता पिछले 3 साल में, तो निफ्टी टोटल मार्केट ने 20.4% रिटर्न दिया होता, निफ्टी 500 ने 20%, 200 ने 19.1%, निफ्टी 100 ने 18%, एंड अगेन निफ्टी 50 ने 18.1%. सो इफ यू लुक एट रोलिंग रिटर्न ऑल्सो, जहां पे recency bias sorts of nahi hoti hai, and even if you look at 3-year rolling return since inception, you will see total market giving a 12.9% return, which is more than 500 Nifty 500 on Nifty 200 or Nifty 50, etc. Same data you can look at 10-year also, 7-year also, even 5-year also. So it just emphasizes that if you're looking at a, let's say, a 3-year rolling return or a 5-year rolling return investment horizon, total market makes a lot of sense as a investor. Top stocks as expected, right? You have representation of everything. And because, for example, I have Nifty 15 breaking, HDFC Bank will be somewhere around 10% plus, right? But क्योंकि यहाँ पे 750 स्टॉक है, लार्ज कैप का रिप्रेजेंटेशन ऑटोमेटिकली अराउंड 71% के आसपास है, राइट, एट अ लार्ज कैप लेवल. एंड you'll see the top stock HDFC at only 6.17%. Then comes Reliance, then come ICICI. In fact, third stock itself is below 5%. So it's not a top heavy sorts of product, which is very good because it just adds to the diversification and sorts of ensure that other stocks also are getting reasonable representation. For example, the 15th stock, which is Bajaj Finance, itself has weight of only 1%. From a sectoral representation, as I mentioned, that you get representation to almost all 22 sectors, right? You have financial services at 27%, IT at 9.6%, oil and gas at almost 8.4%. So to conclude, I think Nifty Total Market Index, on which we are launching Mirae Asset Nifty Total Market Index Fund, provides exposure to all the market cap segments on NSE. It covers all large cap stocks, all mid cap stocks, all small cap stocks, and 250 micro cap stocks. It covers almost 96% of the entire universe of companies present on NSE in terms of full market cap. Best thing is that this representation evolves as the market is evolving. As I mentioned earlier, 10 years back, large cap was 82%. Today, large cap is 71% in terms of weightage. Earlier, mid cap was around 12%. Now it is around 17%. Small cap was only 5%. Now it is 9%. Micro cap was only 1%. Now it is 3%. And in future also it will evolve. Whichever is doing well will get weightage will increase. Whichever is doing bad, weightage will automatically reduce. And that is the beauty of passive fund, that automatically whatever is doing well will start getting higher representation, and whatever is doing poorly will start getting lower representation. And that is the power of total market strategy. Gives you exposure to all segments instead of doing it individually. This is one product where you can get that exposure at a single place. And from a performance point of view also, because these segments have done well, you'll see that total market, not only from a CAGR point of view, annualized return point of view for previous 3, 5, 7, 10 years, you also see on a rolling return basis, which is more important because then the recency bias is removed, has outperformed your typical broad benchmark like Nifty 500, 200, 100 and Nifty 50 indices. So as I mentioned, that the NFO for this index fund starts today on 8th of October. It will close on 22nd of October. And the minimum investment amount is 5,000 or in multiple or any amount in more than that. And as I mentioned, that this is a very powerful product which can form part of your core portfolio. It will take the headache away of when to invest, how much to invest in what segment, and your basis is such a strong core portfolio. So that's it from me. If you have any questions, please type them on the chat box, and I'll be taking questions which are obviously relevant to this NFO. Yeah, so there's one question from Kajal. So Kajal, yes, you can obviously refer to this risk and return present slide from the presentation which is uploaded on our website. So please visit our website and find this presentation, and you can get the correct numbers. There's a question by Manish Gulati. What is the TER? The TER for the direct plan will be around 20 basis point, which is 0.20%, and the regular plan will be somewhere around 1%, which is 100 basis points. So if you're a direct investor, you can do direct investment at 20 basis point. A regular plan will be at 1% or 100 basis point. That will be the approximate TR. Now, there's one question by Datta Prasad Bhide, who asks how quantity of stocks of each company is decided. Yeah, so Datta, first of all 100 large cap, all 150 mid cap, all 250 small cap, and top 250 micro caps are selected. So that's how you have 750 stocks. And for weightage, कि किस stock में कितना जाएगा, that is decided based on free float market capitalization of a particular company. So HDFC has the largest free float in Indian market, and that is why they have the largest allocation at around 6% in this particular fund. If tomorrow, if let's say there is some other company which gets higher free float market cap, that company will become the largest holding. So it's all decided by that which company is larger. Whichever company is larger within 750 and by whatever quantum, that will be the allocation to this particular stock. So there's one question by the name is not written. Is it best to go for micro cap by seeing this all across? I think answer is no. A micro cap is obviously very volatile. It has done well recently, but I think if you look at risk also and returns also, I think it will be more prudent to build your portfolio using large, mid, small, and micro, and then depending on your risk profile, you can increase your allocation to micro caps. But I think it will not be prudent to only look at recent performance and then go for micro cap. It is equally important to have a very balanced portfolio, especially when let's say markets are volatile or let's say can undergo correction. So one question is by Lalit. I think that's a very important question. So he's asking, so basically this fund is like multi-cap fund. No, Lalit. So multi-cap fund, and so this fund is more like a flexi-cap fund. So what's the difference between multi-cap and a flexi-cap? In multi-cap, you need to have 25% allocation and minimum 25% allocation in large cap, mid cap and small cap. So minimum 25% आपको डालना ही है, right? In fact, जो Nifty का multi cap product है, index है, it has 50% capped allocation towards large cap, 25% towards mid cap and 25% towards small cap, right? तो वो fixed है. इतना आपको रखना है. In case of this product, which is total market, it's like a flexi cap. So right now, it will, while it has representation to all these segments, from an allocation point of view, it has 71% towards large cap because वो उसका market cap representation है. It has 17% towards mid cap because वो उसका market cap representation है. So 17% instead of 25% multi cap. Small cap का representation 9% because का market cap representation वैसा है. So 9% instead of 25%, and then micro cap का के तरफ representation is around 3%. So while it has exposure to segments like multi-cap fund has, but the way of weight allocation is different. So this fund is, let's say, a more large cap tilted. I think there's one question by SD Khanna, Nifty total market, why and what for, how is it good for me at the age of 72 and how much should I invest? Sir, it totally depends on your risk profile, etc. I suggest that you consult an investment advisor because I don't know your portfolio. But if I have to say that within equity market, first at this age, you should first probably look at allocating in Nifty 50. And if then you have a reasonable risk profile, you can look at a total market index or a Nifty 500 for a more balanced allocation or for a more stable allocation in the equity market. So let me just. So there's no ETF on this scheme. This is only index funds. The number of stocks, as I mentioned, will be 750. Yeah, there's a question by Santosh Srinivas. Is biannual rebalancing a reasonable time frame? I think yes. For broad market product, bi-month annually is a reasonable time frame. I think for certain smart beta products like momentum, like low volatility, etc., there you need a quarterly rebalancing. But for broad market product, I think semi-annual is a very good sorts of time frame. So how many minimum max stocks? I think I've already answered that will have 750 stock. So at the time of NFO reopen and sale, and so this question by Pramod Bhardwaj, if market down on that day, why rate of NFO fund down from rupees 10? So sir, basically, let's say uh, NFO opens, you'll get allocation at rupees 10. If market moves up by 20%, your NAV will become 12. But let's say your market goes down by 5%, your NAV will become 9.5. And in this fund, the basically since the allocation is based on Nifty total market index, it will in a way capture the performance of Nifty total market index. There's one question by Kajal Kiran who is asking that why one should opt for this over flexi cap, which gets some active return. I think, ma'am, that is completely your choice. Whether you want to go for active or passive scheme. I think data shows that even in mid cap category, even in small cap category, when people expect that active returns are easy to generate, the mid cap funds have underperformed the benchmark, and so has so many small cap funds also. So it is getting increasingly difficult to pick a consistent active fund right now, which is performing consistently year after year, and that is why I think that some allocation towards passive fund makes sense, which simply avoids that performance cycle of any fund manager. So you should actually allocate some portion of your money in passive scheme, and some depending on your preference of fund manager, allocate some money in an active fund. There's very good questions. I'll take it basically, which is I have six Mirae asset different funds, all SIPs. Are they investing in similar companies? So, see, Abhinav, if you have six Mirae asset products, you should act, I don't know what products are those. So you should look at the overlap, right? If there's a significant overlap in the portfolio and the strategy which those fund has and which this fund has, then probably you don't need to invest. I think over diversification from that point of view, if you already have invested in schemes which have similar portfolio, then possibly you don't need to. But as I mentioned, this is a single stop solution for getting exposure in large, mid, small, and micro cap companies. I think I'll take this last question because it's sort of a critical question also, but very interesting question also, which asks that why don't select good eggs instead of loading whole eggs, including stale ones, which may reduce performance. So Ravi, first of all, if you want only good eggs based on certain parameters, you have smart beta products. So for example, we have momentum and quality based products where stocks are assessed on return on equity, profit stability, etc., and companies are selected based on that. So if you want, you can select those scheme. We have small cap, mid and small cap. We have low vol on large cap, etc. But if you want a pure market exposure, because market is a very good leveler, right? If a company is doing well, its market cap will grow, its representation in index will grow, and hence in the fund will grow. If a company is not doing well, the market cap will go down, the allocation will go down in the index, the allocation will go down in the fund, and that is how the index work and passive a simple passive fund works, and it seems to be doing well, right? It's hard to identify good or bad eggs also. If it was so easy, every active fund would have been doing so well. So I think there's uh, pros and cons to both of these strategies. Sometimes a simple investing works better, but if you feel that you need more quantitative strategies, I think smart beta is a product which you can evaluate. This is a more simpler approach which let market forces decide the growth evolution of the market, and based on that the fund obviously changes the stance of where to invest and how much to invest. So I think that was pretty much all the questions. Thank you so much for joining this webinar and listening through this very interesting offering which you are coming out, which is Nifty Mirae Asset Nifty Total Market Index Fund. We hope for your participation in this NFO. This can become part of your core portfolio. And if you have any doubt, please contact us through social media channels or through the RM, and we'll be glad to answer as many questions or clear as many doubts as we can. Thank you. Goodbye, and please take care.